Hello everyone and welcome back to my new video. You are watching Trend Top and now let's get in this video. Cathie Wood's exchange-traded fund sold more Tesla Inc. shares, taking the total value of the electric vehicle maker's stock they've offloaded this month to about US $466 million. Cathie Wood would sell Tesla Inc. if its price hit her 5-year target in the coming year. The electric vehicle maker's stock is now roughly $750, and her base price target in 5 years is $3,000, she said. If nothing were to change in our outlook and we got to $3,000 next year, my guess is that we would be peeling out of it, she said. The head of ARK Investment Management was speaking at a news briefing following a panel at the Morningstar Investment Conference Wednesday. At the session, she debated veteran investor Rob Arnott, who has been skeptical of high-valuation growth stocks like Tesla. Arnott, the chairman of Research Affiliates, asked Wood how investment managers should decide when to get out of positions. Earlier this year, Wood told Benzinga on an episode of the Raz Report that ARK would announce a new price target for Tesla shares. Shortly after the interview with Benzinga CEO Jason Raznick, ARK announced a price target of $3,000 for Tesla shares. That $3,000 price target for the year 2025 could be a topping event for ARK's investment in Tesla. If nothing were to change in our outlook and we got to $3,000 next year, my guess is that we would be peeling out of it, Wood said at the Morningstar Investment Conference earlier this week. ARK uses a Monte Carlo analysis to build its price target, which is based on a series of simulations to determine the probability of different outcomes with random variables. The price target was based on 34 inputs, and over 40,000 possible simulations were used to create the new price target. The price target takes into account the building of more gigafactories and adding car insurance. The impact of the price of Bitcoin, which is held on the Tesla balance sheet, was not part of the valuation calculations. Tesla's energy storage and solar business were also not included in the pricing model, said. What's the self-discipline that can protect those gains? He's self-discipline that can rotate you into undiscovered disruptors where the market is unaware of what they're doing. Wood's answer on selling Tesla came during the press briefing, when his question was repeated. But during the panel, she defended her famous Tesla bet, along with listing some of the advantages of electric vehicles, including that she hasn't had to go to a gas station since September 2018. She cited the price drops in battery pack systems. Due to those declines, she said she expects the average price of an electric vehicle to fall below that of a gas-powered car in the next year or so. That trend will continue into 2025, when she expects the average electric vehicle to cost $18,000, while a regular gasoline car will be roughly $25,000 to $26,000. It's been a dramatic year for Wood after her firm's exchange-traded funds beat most of the U.S. market last year. Her flagship innovation ETF is down 5% this year after returning nearly 150% last year. Wood continued to advocate for her bets on disruptive technology and said she expects a 30% compound annual rate of return for her flagship strategy. She also said that she did not think that the market was in a bubble. ARK's funds have offloaded some Tesla stock this month after shares of the company rallied. Still, the electric vehicle maker is their biggest holding, according to data compiled by Bloomberg. ARK's strategy regularly involves selling some of its winners to invest in other targets. Also during the news briefing, Arnott was asked about what will happen with China Evergrande Group. He said that he has lost 6 basis points on his investment in the property developer, but expected that Beijing would ring-fence the firm to limit its economic fallout. Closely watched money manager Cathie Wood told CNBC on Wednesday that Apple could have owned the driverless vehicle market by purchasing Tesla when given the chance during the electric vehicle maker's troubled Model 3 ramp-up. We've been watching Apple very carefully for years now. Because what is an autonomous vehicle? It's the ultimate mobile device, she said in a wide-ranging Squawk Box interview, during which also she talked about her ARK Invest strategies, the returns she expects long-term, and buying Zoom on its recent drop. Apple shares hit all-time highs last Friday and then again Monday, rising solidly above $2.5 trillion in market value, following last week's Bloomberg report about the tech giant accelerating efforts to launch a self-driving vehicle. Apple was not immediately available to respond to CNBC's request for comment about its autonomous ambitions. Tesla was not immediately available either to comment on Wood's comments. This is very hard work, and with all the management turnover, we'd be surprised if they're able to pull it off that quickly, Wood said, referring to a Bloomberg report in June about the departures at Apple's autonomous unit of 3 top managers. In 2018, Apple lured Doug Field, then Tesla's senior VP of engineering, back to the company where he had previously worked. Apple also hired myriad other former Tesla employees. Wood, a longtime Tesla Uber bull and shareholder and believer in CEO Elon Musk, told CNBC, "This should have been Apple's market. Apple should have bought Tesla. Actually, when they were given the opportunity, we're happy they didn't." Musk revealed in a tweet in December 2020 that he reached out to Apple CEO Tim Cook during the darkest days for the Model 3 program about the possibility of selling Tesla. Musk said Cook refused to take the meeting. The first Model 3 Seconds, a less expensive EV sedan aimed at mass-market car buyers, were delivered in 2017 after increasing production to meet demand was problematic. In 2018, Musk tweeted that the car business was hell and that he was sleeping at the factory to try to solve the problems. Fast forward to today, Tesla has joined the $1 trillion market cap club, and Musk, the largest shareholder in the EV company, has been selling billions of dollars of his stock holdings. Wood told CNBC she sees nothing wrong with Musk selling stock and taking profits and paying billions of dollars in tax bills related to stock option grants. Tesla is the largest holding in the ARK Innovation ETF, representing 10.1% of assets with over 2.9 million shares and almost $2.2 billion in value. Tesla is also the largest holding of the ARK Next Generation ETF, representing 10.2% of assets, with over 745,000 shares representing over $560 million in value. Wood has been trimming the stake in Tesla shares recently, both on a share basis and also as a percentage of holdings. Earlier this year, Tesla represented 10.5% of assets in both funds. Tesla is the largest holding in both ETFs by a considerable margin. The next closest assets are Teladoc Health and ARKK and Twitter Inc. and ARKW at 5.7% and 5.6%, respectively. Cutting the stake in Tesla significantly would greatly change the structure of the ARK ETFs. Regulatory filings till 8 Tuesday showed that Musk exercised options to buy 2.15 million shares of Tesla and sold 934,091 shares worth just over $1 billion. Since his Twitter poll on Nov.6 asking whether he should sell stock, Musk has unloaded 9.2 million shares worth $9.9 billion. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.